All right, so we are live. So guys, this is the very first time that I'm using the new YouTube dashboard, and apparently on my preview screen now it shows an error. So I'm not even sure whether there's anyone watching or not. Yeah, hopefully it's okay. I'm just making sure that we are going to be able to live stream going forward. It is a new studio, as they say. So, in today's topic, we're going to be talking about profiting from crypto and building a portfolio from scratch. Now, this topic would be better served probably at beginning of the year, but I think as folks are getting their bonuses, especially after a year of hard work, and they might consider actually building a portfolio in cryptocurrency. Now, obviously, this episode is considered as non-financial advice, and I would like folks to take full precautionary measures when putting their money into a highly volatile, currently uh, not as transparent and less regulated, asset class compared to the existing financial markets such as stocks and of obviously such as derivative products. So you just have to be a little bit more mindful that you have to do your own research, and whatever risk that you are taking in this space, take note, never ever put in more than you can afford to lose. So let's get into it. So I started crypto back in 2016, right? February of 2016, I bought my very first Bitcoin at a ATM in Chinatown. That was like the one that was the ATM that I knew. And back then, Bitcoin was at 300 and I think $78 per coin. I didn't exactly know what it was then, but I feel that it's one of those things where, okay, it's a digital asset class, and I didn't know how to really use it, who was accepting it, what was it actually all about. But I told myself, okay, it's time to get started with something new. I read a little bit about what it was from the white paper, and of course there was a little bit of buzz and news. But I said, okay, this is something that I want to venture into. I was getting paid for certain affiliate programs with Bitcoin. So I took it as a form of currency and nothing more than that. I just felt that it was maybe an alternative to PayPal, or what was the other? I was using some other payment processor at that time, because the companies were paying into various types of payment wallets or payment gateways. So Bitcoin was one of the so-called alternatives. So I was like, okay, let's try out this Bitcoin, and I started reading about it, trying to understand what blockchain technology is all about. It's all about decentralizing the network, and at the same time, it also provides a lot of security, because since the network is decentralized and it's verified by it's going to be verified by miners that have a mathematical process of verifying all these transactions. I think it would serve a very strong purpose going forward, especially if you are a company that holds large databases, and also it protects us as consumers. Especially, you want to have more secure data. You don't want to have your data easily you don't want to have your data easily sold off to, or at least impeded, or at least you have some control, right? So the private keys, public keys were kind of a little bit of an essential security measure that is being built in as well. So, long story short, I bought my very first Bitcoin in Chinatown, and then from then I proceeded to just downloading a very simple wallet. And as I downloaded the wallet, I told myself, okay, this seems relatively simple, and I got to experience, or at least I started reading on altcoins, right? So there were the very first altcoins like Litecoin. Then we had Ethereum, we had Monero at the time already. So Ethereum kind of kicked off the whole ICO craze, right? Where all the companies started to build on Ethereum, minting their tokens, trying to sell their ideas, raising funds raising funds via token sales. The whole a whole new YouTube genre was born: cryptocurrency, blockchain, so on and so forth, right? So suddenly you have this interest in this new booming space. And what better way to get involved is through the exchanges, right? Through the exchanges, because if you wanted to participate in ICO, at that time you would have to go to the website, right? Or that company's website, put in your contribution, as they say, your contribution or your participation. So since it's crypto to crypto, it is not considered as fundraising because you're not actually putting in fiat, right? You're putting in another digital asset class. It's considered like an exchange. You're exchanging Bitcoin or Ethereum for that particular token in exchange, right? So that's how you participate in ICO. And the whole market started to get very, very hot when you could when your tokens got listed on an exchange, and that token would actually easily move up in value because people couldn't participate in the ICO, right? And it was just purely speculation. There was no real strong fundamental development behind it. A lot of folks just got all caught up with the price appreciation, and that is it. There was no real due diligence conducted. A lot of people just wanted to speculate because it was just so easy, right? There was very little to no KYC that was required, especially if you wanted to sign up for an exchange. So at the time, it was Poloniex, it was Bittrex for me, and yeah, that was pretty much it. And then from then, things really started to kick off. You had Binance emerging in the market, right? Coming out with the very first exchange. Binance eventually came up with discounts, right? Where if you signed up on an affiliate, you sign someone up, you get a little bit of a referral bonus, come trading bonus if your referral, if you're the one that you referred actually trades. So you get some bonus for trading, which you either get paid in that token or some in BTC, and eventually you will be able to earn probably US dollar tether. So a lot of things have changed, right? It is already 2019, end of 2019 already. So I must say that a lot of things have transitioned and happened. We are now in that stage where people are a little bit more aware, or at least they are starting to kind of come back into the space. So let's start from scratch. Now, obviously, it's very difficult to start off any kind of portfolio, any kind of asset class without any money. Okay, when you start a portfolio, right? Just try to ask yourself, how much are you willing to put in? Okay, and you have to tell yourself, realistically, right now when Bitcoin is at $9,200, right? How many Bitcoins can you actually afford to buy, right? And if you are someone who is completely new, you're completely oblivious to the space, you are watching this video for the very first time, should you even consider crypto as an asset class, as an investment? Now let's look at it. Okay, so if I was new and I'm talking to myself for the very first time, I would ask myself, firstly, how much am I willing to put into this space, right? I've heard about it. I understand a little bit about what Bitcoin can do. I know that it has price appreciation. So that's definitely rule number one. There's growth, right? Even if you're new, okay, just pull out the last few years, okay, of where Bitcoin was and where is it today. There's growth. So that's rule number one. That means there's price appreciation. There are people holding it in the market. There is actual demand. Okay, so now, is there a use case? The next thing is, when I buy the Bitcoins, right, can I easily use it? Now, this is so unique because in the stock market, right, you don't use your stocks, okay? You're buying it and holding it. Obviously, you don't actually hold it. Your broker or your custodian will hold your shares when you buy it off the exchange. You don't own your stocks, okay? These are all just digital these days as well. So you don't actually hold your stocks. You don't actually own your stocks, right? You're just buying it, and of course, through your brokerage, you can buy or you can sell it. It's very simple. Now, what about property, right? When you buy a piece of property, obviously, you don't immediately own it unless you pay everything up front and the title deed becomes yours. From there, what is the use case? Either you are going to be staying inside that property with your family or your loved ones, or you're going to buy it and have the intention to rent it out. It's very straightforward. When you rent it out, obviously there's cash flow for you, or you can buy, hold it, don't rent it out, and eventually flip it in the market a few years later. So all these things are considerations. Now, in crypto, everyone buys it, majority to flip it. Okay, let's just be very honest. There's very little utility at this point of time, other than the fact that since there's a market value and you have a willing party on the other end to accept it for that existing market value, that is the use case. Okay, so guys, just take note that the kid will occasionally make some noise, and it might be a little bit disruptive, but don't be a little bit more patient. So anyway, yeah, so that was what I was trying to say. So anyway, now with any kind of token, the only strongest use cases is Bitcoin's use case, right? Where you can actually store your Bitcoins in a private wallet, a desktop wallet, on an exchange wallet if you want. There is that security. Okay, there is that security. You own your own private keys. Okay, the next thing is, what's the utility? So far, I have only been able to pay for my Bitcoins when I am, for example, maybe if I wanted to play, if I won an auction for my Magic the Gathering cards. Okay, so there's an actual use case. When I want to maybe pay someone who is willing to accept Bitcoin as payment for either a service, or I need to exchange it for cash, that's the only other alternative. I have not actually used my Bitcoin to purchase for a hotel booking, or bought a book, or buy food. I have not been able to have that opportunity to do so, and now it's already 2019. Okay, I'm just being very honest. That's just how I see it. Now, when I use Bitcoin to pay for something, it's either because I want to cash out, means I need the cash. So you need to think about, when you buy an asset class, you have the intention to offload the asset class as well. You can't buy and just hold it and have no reason, no use case. It's not right. Okay, it's not right. So from an investment standpoint, always remember, risk is very important. When I buy something, I must be able to sell. A lot of folks, right, because they have the consumer mindset, where I buy, right? Let's say you buy a pair of shoes. The likelihood of you thinking about flipping your pair of shoes is very rare, because you are probably not a trader, right? You're not a trader by profession, neither are you doing it as a hobby. You're actually buying it with the intention to wear it. So you are buying it for the use case. I buy the sneaker because it's nice. I want to wear it out, I want to show it off to my friends, but I have no intention of selling it. If I can flip it and sell it off later in a garage sale for a depreciated value, or potentially if it's a very sought after pair of sneakers, maybe there is a possibility of actually profiting from that purchase in the secondary market, why not? So you have to kind of think about all these kind of things, right? And most people, right, 90%, 99% of folks don't think this way. They are consumers. At the end of the day, consumers don't think about value. The only value is, I want it. I want it. I need it. I'm using it. So there are strong use cases in digital currencies. Unfortunately, there are very little use cases at the moment for digital tokens. So that's where the risk is there. Now, if I buy Bitcoin and put it in as part of my portfolio, let me just tell you one thing. It is one of the most volatile, but it can also be one of the most rewarding asset classes in your portfolio. Okay, so let me perhaps go to the charts to kind of validate this for you. Okay, so if we look at Bitcoin's chart, right, and we look at the longer time frames. Okay, we look at the longer time frames. Okay, let's go to a long. Probably we go to Bittrex or something like that. Okay, so this is a monthly. A monthly chart. And as you can see at the very beginning, back in 2016, so let's look at the period where I started. Back in 2016, as I mentioned, I bought Bitcoin at 378 USD. As you can see, the low was 360 for that particular month in January. I bought my very first Bitcoin back in February, right? And yeah, it's now currently up. It's up significantly from that time. So if you look at the growth, right, 9,200. So from 9,200 and now from the price point, if you had just bought Bitcoin, right, 9,200 divided by 378, you have already made 24 times on your investment. And when you say 24 times, right, 24 times is 2,400%. 2,400% divided by 3 years, okay? That's 800% annualized. There are very, very little asset classes in the world that are able to do that effectively, okay? Even stock portfolios, although they can do that, but because the market cap is much larger, it's not easy to move that much that quickly. Right now, Bitcoin is only, or at least the whole crypto space is only about 250 billion. There are stocks out there in the world that are already based on this market cap. So it's very difficult for you to buy into a particular company and hope to have an 800% return year on year. So this is kind of like how I'm trying to show you guys. Now, obviously, in between there are lull periods. So the time frame is very important. There are a lot of folks, for example, like Shaw A, he wants to make $1 million. But the question is, how do you make $1 million in crypto at this point of time? Let's just say you want to make $10,000 in crypto. How? You have to ask yourself, what is the likelihood that is able to happen? Because if you are asking for $1 million, you have to see the projection. You have to have some past performance, some past data. Okay, and you must ask yourself, how much money are you willing to put into this space? If you're going to be putting in $10,000, right, and you want to make $1 million, for example, it's very simple, right? So you just divide it by 1 million divided by 10,000. You need your investment to do 100x. What is the likelihood of that asset class doing 100x? So you have to see the past performance, right? But unfortunately, if the asset class has never done 100x and you put your money into that asset class, do you think what is the probability or the likelihood? There's no historical data. So whenever folks, right, back in the day, in 2017, that was the funniest period ever because I was looking at everyone getting lucky. And true enough, everyone did get lucky. If you bought N shares that had no historical data, it was $2, it went all the way until $79 or something like that. It did very, very well. And true enough, it did do 10x. I think it did 100x or something like that. It's very crazy. But right now, there's no such thing. There's no way that any kind of crypto can do that once again. At least not in the current market conditions, okay? Because right now, you must understand that there are more people who have the trading mindset. So there will be very, very quick take profits, meaning that people are very comfortable with 15%. Some are even comfortable with 5%, especially if they're trading on larger volumes, okay? So the likelihood of why it was better back in 2017 and doing 10x to 100x was because no one knew how to take profit. No one knew how to take profit. No one understood the buy and sell, right? They knew how to buy, right? But they obviously didn't know how to sell. And when they bought, it was not even through a trade execution. It was just depositing into that ICO's private wallet, and then from then that company, you would have to trust that company to deliver the tokens to you. If they didn't deliver, right, you were basically scammed, okay? So if they did deliver, you suddenly have these tokens. Then you're like, oh, okay, how do I trade it then? How do I cash out, as they say? So when I started talking to a lot of folks, right, a lot of them didn't know how to cash out. They didn't know how to take profit. So why did they not know how to take profit? Because they didn't even know how to use the exchange. At the time, exchanges didn't have stop limit orders or stop losses. There was no such thing. It was either you were gonna buy or you're gonna sell. So there was all the fat finger stuff that happened where people would accidentally key in one less or one more decimal point. One less or one more zero or one more digit, and then after that they will either accidentally buy up all the way, right, or to the highest order, or they would actually sell down at one of the lowest price points. So a lot of mistakes were made during that time. Right now, folks are a little bit more careful. It's still obviously confusing because a lot of folks don't see past 2 decimal places. Crypto is up to 8 decimal places. So you have to be very, very careful when keying in your orders, and you also have to be very, very careful when buying or selling. mistakes have been made, guys, and we're talking about even veterans also make this kind of mistakes, because sometimes you're in a rush to go for lunch or something, you key in the order, after the next thing you know, hey, it gets executed. So be very, very careful. Right now, when you talk about purchasing any kind of digital currency, I always will put people, or I would advise folks who have never bought a single cryptocurrency before or crypto asset, just start with Bitcoin. Okay, you don't want to touch the altcoin market because there's just so many out there. There's 2,000 to even 3,000 over listed and unlisted cryptocurrencies out there. If you are not experienced, please don't bother. All right, don't bother, because there's just too many out there, and anyone can sell you anything online. Okay, there's no restrictions, there's no governance or oversight committee to kind of allow you to have this. Yes, you have groups that will have collective discussions or mind shares, but you know what? Everyone has their own agenda, so they kind of want you to buy it, and it's a very dumb mentality when I think about it. Because why do I say that? When you are part of a particular community, let's say if you went to you're interested in company access token. Let's not name any names. Let's say you're interested in company access tokens. Where do you have to go to get more information that you can speak to someone about it? You will have to join their Telegram group. And these people are already invested or they're already interested. So there's already a bias, right? So you go in asking, hey, should I buy company X tokens? You just went into the lion's den. Okay, you went into the lion's den asking whether or not are lions safe. Are they safe to? Can I sit beside the lion and pet the lion and share food with the lion? That's what you're doing, right? So effectively, you can't do that. Okay, although you want to have more information because you want to speak maybe to the team members and so on and so forth, but theoretically you went into the lion's den. Now, if you were to somehow be able to find a community like mine, I am unbiased to anything. I don't have loyalties to anything other than making profits, right? So my loyalty to my subscriber group is focused on making sure that they make money. Okay? That's how it works. So I'm not here to say this, you buy this because I like this very much, so on and so forth. I buy it because there's a potential for it to make money. I'm able to flip it. I can buy other asset classes such as property, build my stock portfolio, build my Magic the Gathering portfolio. That's how it works. I don't say, hey guys, you better buy this because I'm close to the founder and so on and so forth. Yes, there are times when I am able to have a close relationship to certain founders, but I don't create a bias. I'm only using the information that I have from them, and we make an educated investment decision. It's very, very different. All right, they are not paying me, they're just telling it to me, and how I decide to use that information and share that information is very important. So I have zero biasness in that sense. Now, if you can find a group like that, or you can find information like that, it's very difficult because firstly, you want to have a discussion. So maybe I give you a reference. There's Zack Investments. Okay, so Zack's Investments, they are kind of licensed themselves, but at the same time also whatever articles that they print out, this is about stocks, by the way. So Zack's Investments is purely about stocks, which is equity, right? So they are also a fund. That means they have the license to do capital fundraising, and they have a portfolio where they manage the stocks that they recommend. So it's a kind of two-pronged thing where they are able to, you can say also to a certain extent there is certain biasness as well, because they could potentially be creating interest in their investment portfolio. And to be fair, to be frank, there is that connection everywhere. For example, if you see a website, okay, a very prominent cryptocurrency website where you get information from, apart from paying the fee, right? A company can pay a fee for an article to be written. But at the same time, sometimes that owner, right? That owner actually owns a particular crypto as well. Sounds very familiar, right? So if you want developments happening within your particular cryptocurrency, you kind of own a part of the media, right? What kind of information is being sold to the public, whether freely or through subscribership. There's no easy way to do this, guys. I'm just being very frank. It's just the way it is, and it's how you decipher the information. Because if you want to make money, obviously there is a market. Whether is it a primary market or a secondary market, there is a market, and you just have to decipher the information. So that is the second key part. Because when you want to buy something, you also need to have information. It's very important. Now, in crypto, where do you get that information? Through a website, a news site, these days at least you see a little bit of coverage from the main like Bloomberg, or let's say you see sometimes you see it on Bloomberg, and you sometimes see it on, honestly, I don't really get the information from Bloomberg or whatever, right? I really can't trust those guys, because they were kind of just riding in on the momentum, right? Because the big fund houses are now starting to step in, so you see the bigger news sites who are trying to capture the traditional money, right? I don't use those sites. I'm pretty much very self-sufficient in finding resources on my own. I don't really watch those American shows, right? I don't need to, because a large part of everything that's happening around crypto is in Singapore or in Asia. So yeah, we have more than enough startup companies that are here who are in the digital asset space, fintech, blockchain. Yeah, so I can pretty much make a phone call, and I can pretty much get that information. But where do you get that public information? Unfortunately, you have to get it through the sites that I just mentioned. When you type blockchain and crypto on Google, that's how you get it. Okay, and you start reading and you dive into these community groups, you get the mind share, and you hopefully get some sort of telltale sign. So back to it, there's very lack of actual financials. So the next thing is, after you got all these news, okay, these are all superficial stuff, guys. Let me just get to the main point. So now that you have sorted out where you get the information, you have the white paper, you've got your white paper in front of you, you join the Telegram group, you join either my group, and then you start asking questions, right? What happens then, right? You eventually need to make a decision. Am I gonna buy? Am I gonna buy it? Am I not gonna buy it, right? Let's say you are completely clean from scratch. So let's say we assume that, okay, I am convinced that this particular company, right, is gonna be doing what they say that they're doing. But let me tell you this, and I want to be very upfront, not many companies are doing what they're doing, even until today. They do hire, but they make very little progress in the space because they are not getting in any sales. They are just finding partnerships, meaning that they are willing to offer their current solution, blockchain solution, okay, or we call it BaaS, blockchain as a service, BaaS, blockchain as a service, and they are partnered up. So the news, when it comes out, so and so X company is, for example, having a collaboration or a partnership with a big enterprise or conglomerate. It's only a small part, but they have the right to put it out as public news because that big boy has already approved for them to do so. That in the past used to pump the coin. It was a real genuine excitement, and people started to blindly buy up. But when that news occurs, right, usually it is time to cash out. Unfortunately, it doesn't hold value. It did had a little bit of sustainability, but it was always very short-lived. Now, the next thing is exchanges. Exchanges play a very, very big role also in any kind of parabolic movement, any kind of pump, as they say. When exchanges decide to list a coin, right, it is one of your key exits. It's not your entry, okay? Sadly to say, when an exchange finally decides to list your coin, it is time to get out. And this is the part where it becomes so difficult, because when I'm talking about a portfolio, how is it that you are creating a portfolio? Because a portfolio means that you want to hold it. You have the intention to hold it for a good number of years, not a good number of days or a good number of months. But crypto is just so sad to the point that whenever there's a particular listing or a particular piece of news that is coming from an exchange, you need to capitalize on it. And that is the only time when you have enough volume for your investment to get out. Until the market cap is strongly at 500 billion and above, you can safely say that your $10,000 investment has an opportunity to exit. Now, this is through many, many years and many, many trades that we have done over and over and over again. And I tell you, it is always very difficult to sell. Sometimes it's even very difficult to buy because there's sometimes just not enough volume. When you see all the volume that is in those exchanges, they are usually sharing each other's volume. That means the small exchanges will piggyback on the big exchanges, and the big exchanges obviously will obviously have always the most liquidity and have built trust amongst all the members, all the users, because you don't want to deposit your coins you don't want to deposit your coins into an exchange that you have hardly heard of, right? Even though how attractive the incentives are from that particular exchange, you do not want to go and put your money into or your cryptos or your digital assets into an unknown exchange. That is a big no-no, right? It's a big no-no. You should never do that. But people will always fall for that trick. So that's also another warning, right? And a warning to you, especially if you're new, that just because a new exchange pops up in your country, it doesn't mean that you immediately have to use it. You really don't want to do that. Go and read about Quadriga CX, right? Quadriga CX is a Canadian exchange that claimed that they were approved by the Canadian government, but they didn't have such an approval. And in the end, the owner kind of either actually faked his death, right? And ran away with all the funds, right? And it happens all the time. There are many, many instances where it's an inside job and the tokens are all lost, or you have, you have an exchange that is not compliant and they get raided. You don't want to have all these kind of headaches, guys. So stick to the ones that have been around the longest and the most prominent. So bear in mind, longest and most prominent doesn't mean that as well. Recently, just this year, just last month, the largest exchange in Thailand actually had to close down because they were not compliant. They were not able to comply with the Thai SEC's rules and regulations, and it was actually a one-man show. So that really took the whole industry back a bit, right? They will realize, wow, it was the biggest exchange, but it was only run by one person. Obviously, he had operational staff and so on and so forth, but he didn't have the compliance, or he didn't have the staff to help provide all the information that the Thai SEC needed. So this is the issue. Now, take note, like I said, the risk is still very, very high when coming into this space. But now let's get to the rewards, okay? So let's say, Ryan, enough of all this talk. I'm ready. I am willing to risk it, or at least risk that portion of my liquid assets. I want to go into Bitcoin. All right. So you buy your very first Bitcoin, and obviously you don't know anything about charts. You are a complete noob. You don't even know what are all these things that you're seeing right now on the screen. What are all these green and red looking candles, right? Yes, these are actually candles. So now it becomes technical already. It becomes technical. So you need to understand a little bit about technical analysis, price entries, when to go in, when to go out, right? So that's why people tend to get a little bit lazy, and they're very dependent on what certain technical analysis YouTubers are talking about, because they don't want to invest in the software, right? They don't want to invest in the software. For example, this is Coinergy, TradingView. They don't want to invest in any of all this kind of stuff, and they are too lazy to learn about technical analysis. So they rather watch a 5-minute video, which seems to be getting a lot of views all the time. Watch a 5-minute video, see what this guy says, and I'll buy or sell based on that analysis. You know what's the risk in that? If that person is a short-term trader, he is going to do very well for himself because he's able to make mark-to-market decisions. So mark-to-market decisions means that he can make a decision on the spot because he literally knows what to do. Do you think, let's say he says, let's buy Bitcoin at $8,000. You say, okay, I'm going to queue, since this guru is going to ask me to queue for and buy Bitcoin at $8,000, I'll just put my queue there. But what if the market tanks aggressively past 8,000? Right? Because you are not watching, or you do not understand the market sentiment or the market movements enough. You're a busy individual. You're working 9 to 7, 8, 9 hours. You have a family to take care of after that, and you left the order there. So what happens is that you bought at $8,000, right? You bought at $8,000, and the market tanks to 7 or 6,000. At that point, you look at, oh, my order got filled, but you already lost anywhere from 15 to 20% of what you initially invested, what you put as an order. Now, certain folks are gonna be cool with it, right? And technical traders, they don't care about all this kind of stuff. They are not risk managers. They don't even manage other people's funds, right? They have never touched anyone else's money other than themselves. So the psychological risk is actually very low. Their emotional attachment to anyone's funds is actually very low, because they don't have to be responsible for anything that they say, because that initial disclaimer kind of covers them from anything. Sure, they get a bit of trolling, a little bit of slack, and they're obviously not mature enough themselves, right, to even say that, hey, I've managed millions before. Personally, yes, I've managed millions before, because that's my job. That was my profession back then when I was in banking. Right now, I still am doing the same, but I don't manage assets for my clients because I don't want to be in that position, because right now we don't have the right custodial services, or we have not set up these kind of services. But I do help folks on a private basis via consultation. So that's the only way that I can kind of assist you. But at least, because through that constant, consistent, regular meetups and discussions, and through the private group, you are able to make decisions much faster. Okay? Yes, you are now in that situation. So you are not able to, hey Ryan, can I hand you the money and do it? No, you can't. Unfortunately, you should never do that, right? There are so many cases where these kind of so-called traders, right, build a certain level of online presence, and then after that they disappear. They are not to be seen ever again, because either they over leverage, they were trying to show off their lifestyle, and then in the end, what happened? Basically, they couldn't keep up. They did one bad trade, right? They did one bad trade, and customers' funds just completely got wiped out, liquidated. And that is the reality. That is what is going to continue to happen. And I guarantee you, as Bitcoin's price continues to go up, people will try to get lazy and try to get rich, but they don't want to go and do the work, right? So the next thing is, how am I going to arm myself? You need time. You need to educate yourself as much as possible. Go and pick up some books on at least pick up some books on security analysis, or at least portfolio management. What is risk and managing risk? Nobody understands that part well enough. Okay, I always emphasize this. When you put in $10,000, does that $10,000, let's just talk about from a very simple point of view. Does that $10,000, is it required in the next 2 years? Okay, is that required for 2 years? If you need it, Haley, keep quiet. If you need that $10,000 in a matter of 1 to 2 months, and you're trying to get lucky, you're trying to buy Bitcoin and hope that in the next 2 months you can make 30%, as what Ryan did from XTZ. My XTZ trade took 6 months before it delivered 50%. Okay, I did not need the money, but it took 6 months. It didn't take 2 days. It didn't take 2 weeks. And I didn't know that it would happen in 6 months. I would have to have sat on it for whatever time frame, because that was the amount that I committed already. You see the difference there? I did not need the funds. But if you have the intention of borrowing, so that means you have to borrow from friends and family to participate in this market, you need to borrow from the bank, obviously taking it out from a personal loan, credit card, or you're going to leverage your property or assets to get an equity-backed loan. So these three things, or secured lending, right? You better think 2 times to 5 times to even 10 times on your time frame, and whether that you can make the repayments promptly, right? Because the moment that you start lending from borrowing from someone, you are going to be put in the position that it's a clock that is ticking on you. I completely understand that most people don't have that much liquid cash on hand. So maybe you should consider selling some of your unnecessary stuff that you don't need, right? For example, if you have old books, old shoes, old clothes, build up a fund. Start a fund that is from stuff that you don't need, that has been sitting around in your home, start with that, right? The next alternative is obviously your monthly salary. Your monthly salary after you have done whatever deductions and miscellaneous payments and so on and so forth. So after you have made the necessary payments, so on and so forth, right? You have this amount of funds. Now, most folks already have a very most folks already have a certain spending pattern. Okay, they already have a certain spending pattern, and since they already have a certain spending pattern, they may not be willing to give it up. If you want to have life-changing income, you have to make some kind of sacrifices. That means, for example, maybe you are always very used to having certain steak dinners or steak lunches every week. Maybe you have to cut that off, right? You may have to cut that off so that you are able to fund this, because your steak dinner is definitely not an ROI. Okay, you buying a game is not ROI. Okay, there's no ROI from buying a game. Okay, unfortunately, you're buying it so that you can enjoy yourself. So maybe you have to cut off certain things. Maybe you have to not watch, NBA. Don't buy the annual pass. Maybe you don't buy your sports. America is big on sports, and it's so painful. And I have to say this: I'm not a sports fan, so I cannot relate. But I know that those things cost a lot of money. NFL, NBA, baseball. All these are very, very big cultural stuff. It gets very offensive, but I have to say it. Because it's expensive, right? And you're actually dedicating money to it, right? Is it going to help you out in your financial situation? Now, obviously, if you're rich enough and you're raking in, say, 100 to 200K per annum, right? That means you're okay, right? You're good, right? So this is definitely a consideration for you. But what if you're just starting out? That means all life's initial luxuries, you have to give it up so that you can start this, because there is a risk involved, guys. There is a risk involved. This video is not meant for anyone from the US, Singapore, Australia. It doesn't matter, right? It is just about basic things. What do you want? If you see that there is a potential in a particular asset class, obviously you have to put in the money and let it ride out. That's how it works. Okay, there's no such thing as fast money. I'm very glad that the whole market tanked so aggressively and a lot of people got wiped out. I say this in all sincerity because if no one was going to be wiped out, no one would learn, because people learn the best from the most painful experiences, especially when it burns their pocket. It kills off their life savings. They are not able to enjoy life's benefits and luxuries. That's when they learn. It sinks in very, very well, right? If everyone was just making money as if like the casino was throwing out money, free money every day, nobody will learn anything. I guarantee you. So now we're in this stage where a lot of the companies have already been wiped out already, or they're going to run out of money in the next 6 to 12 months. What does that leave us with? It leaves us with Bitcoin. It leaves us with Bitcoin, and Bitcoin is really just one of the ways to go. And when you start building your portfolio, at least when you look at just look at the chart here. Just look at the chart. Let it sink in. This is a monthly chart. I don't look at 1 hour. I don't look at 4 hours. I don't care about whatever technical analysis guru has to say. I don't care about whether he has a lot of subscribers. I don't give a shit, because overall I'm making money. He's making money his way. I make money my way. So when I look at this, I am able to make decisions on where I want to place my buy orders. Okay, I do have technical analysis experience, so I do know where to buy and I do know when to sell. So for me, I already have that basic knowledge, and I tell you, when I teach my folks, right, or I teach my clients, it's very, very simple. You just look at very basic support levels, and you also want to let go of your portfolio, especially if you're over leveraged on certain positions, right? You let go at a certain point as well. It's not difficult, guys. But I don't know why everyone wants to hear all the complex stuff, and people want to just overhype or kind of impress their viewers. I'm thinking, look, man, if you can put the a key into the car and the car starts, right? You don't have to know how the whole engine works, you know. I mean, yes, there are folks who want to know how the whole engine works, but I'm the kind of guy that I buy a car, I put the key into the ignition, and then I start the engine and I start driving. I'm that kind of person. So you don't have to tell, and as long as from destination A, I get to destination B safely, and I'm able to do what I'm supposed to do at destination B, that's good enough for me. So that's kind of like how I teach my folks, right? I don't complicate folks. I don't complicate information. Because right now, in this space, right, there's only so much that people are actually able to achieve. All these cryptocurrencies that you are seeing right now, every single one is high risk. Because even if you were able to buy an equity, if you were able to buy a share of that particular company, right, you would still be at risk of the company defaulting. It doesn't protect you. There's no way that you're gonna collectively have a lawsuit and you know, kind of try to sue the company, claim back anything, because obviously they would have already run out of money by then. So even if you want to fight them in court, they have already declared themselves bankrupt. So there's no way that you can protect yourself. So it's a risk that you have to take. There's all these things that I run through over and over again with all my clients, and they are like very surprised, like, wow, how come I didn't think about it? And yes, it is very shocking, because the folks that I'm in contact with are either from their mid-30s, right? Mid-30s to late 20s to mid-30s to late 40s. So the late 40s are a little bit more experienced because they've done equity investments, they've touched the stock market before. But the ones who are in the 20s to the mid-30s, right, they have never touched stocks before. So they don't think about risk the way the folks in the 40-year-old category do, right? And the thing is, right, why this market has not really taken off yet? Because the big money is in the 40s and above. Because if you can't convince this market, right, this segment of the market, the big money cannot flow in, because that's where all the wealth is, the 40s and above. The youngsters don't have any money. They're buying peanuts. Seriously, they're buying peanuts. You're talking about buying $100 and making a lot of noise. That's the kind of people that you are dealing with, right? And that's the entry, because there's so much accessibility to buying cryptocurrencies that, to be fair, a 9-year-old, or as long as anyone who is old enough to use a computer, has a Facebook account, knows how to sign up for stuff, can start an account, can start an exchange account. Who is to stop them? Because KYC is only done for 2 BTC withdrawal and above. 2 BTC withdrawal is practically $20,000. Do you think a 9-year-old kid could have $20,000? The fact that the kid even has some Bitcoin to deposit and start having fun, obviously the parents would have to be involved to a certain extent, or he's being guided by someone else older and slightly more savvy. But I'm just saying that that's the age group. No one is going to restrict you from starting a crypto account, as far as I know, right? But I'm just saying that with all this risk involved, right now, if you start parking your funds into Bitcoin and you give it a 5 to 10 year time frame, okay, your likelihood, I don't guarantee anything, but the likelihood of you turning a profit based on the past performance of Bitcoin is very, very high. Now, as the market cap increases and the price increases, the psychological becomes more and more painful. So just 3 years ago, so back in 2017, so just 3 years ago, think about it. Just 3 years ago, you could buy Bitcoin for $378. Do you think that someone like me, do I feel comfortable buying Bitcoin at $9,000? No, I don't. But hear me out. What if Bitcoin has been at the $9,000 price point for 5 years? Then people start getting comfortable and buying Bitcoin at $9,000. That's just how it is, because the psychological price has to sink in first. And right now, it is only 2 years. This is the second year. 2018 was 1 point. 2019 is the second point. So Bitcoin currently at $9,000 is more or less going to be quite stable and stuck there for quite some time. Okay, that is why it could not go past and sit comfortably above 10, because nobody likes to see it at a high 4 figures. An average person's salary is anywhere from $3,000 to $5,000 per month. Okay, So if your average salary is 3 to 5,000 US dollars, you cannot even buy one whole Bitcoin. I'm just being very frank. You would be very comfortable to start buying Bitcoin at least closer to the lower four figures. So that's why a lot of analysts were saying, okay, I'm very happy to buy Bitcoin, or at least buy more Bitcoin when it hits $1,000, $2,000, $3,000. Because from a historical standpoint, if you look at the historical standpoint, right, it is so much better to see a nice, comfortable trend line like this, right? The less steep the trend line, I hope you can see, the less steep this trend line is, the better for everybody. So if you want to say, hey Ryan, does that mean that I should comfortably buy Bitcoins when the price goes slightly around this region? Yes, it is very obvious. But the question is, how well and how supported is the price at the moment of Bitcoin? So I'm going to ask you guys, are you comfortable of buying Bitcoin at this price? Right? I mean, just be very honest. Are you comfortable buying Bitcoin at $9,000? If you say you are, then okay, that's you, right? But I'm not comfortable buying Bitcoin at this price, right? I would rather see it at the $6,000 region, the 4 to 5. I'm not unrealistic, okay? I don't expect $1,000 Bitcoin. That's just dumb, okay? But $4,000 to $5,000 is not unreasonable, especially for the fact that it only took how long, guys? From this year, February, right? Wait, let me see. Yeah. So this is from the 1st of this is from the 1st of February. So February, March, April, May, June. So it took 6 months for it to climb that quickly back up and close, right? It closed at 10,833. So it took 6 months to go from $3,000 to 10,833 and close to 14,000. Obviously, the 14,000 I always discount. Any kind of wicks in this space is nonsense. Okay, so I usually completely ignore that, because usually the volume will be so little or the order books will be so thin that it's quite pointless to even consider selling at that price point. Now that we are seeing a gradual decrease, or at least the expectation of the price start coming down, where do I roughly see it sitting? Well, I would say that I still stand by 6,000. I still just stand by 6,000. I just feel that it's more comfortable, more people will be more inclined, and the buying activity will start coming back. It's just pricing, guys. Really, just look at the current your current neighborhood or your country. Who is talking about Bitcoin? Who is talking about altcoins? Who is even talking about investing in ICO these days? Very, very few. In fact, none. Okay, I can say it's very minimal. Okay, so that's another telltale point. Where's the intrinsic value, or where's the actual fundamental demand, or that fundamental interest? At least there has to be interest for people to even look at this space to start buying something, right? So yeah, where's that interest? Since that interest is very low, we have to just ignore the noise at the moment and look at what's there. So if no one is looking at this whole space, right? If no one is looking at this whole space at the moment, we have to just narrow down what is viable, at least what works. All right, guys. So anyway, this is a longer than usual video, but I just wanted to cover all these things for you to consider. And as you build this portfolio, just be very mindful that, like I said, this is a high risk space, and you want to be able to put in funds that you are able to afford to lose. Now, if you are obviously interested in finding out more, always feel free to join our private Discord group. The link is in the description below, and I'll see you in the next live stream. See you guys.